Hey guys, what's up? It's Ace coming to you 6:05 p.m. here in Cali on January 24th. Woo-wee! What a day in the markets, boys and girls. If you like range, this was all about range today. We literally gapped down. This is a chart of the Dow Jones, the 1 hour on the Dow. Gap down, and literally from here all the way down, the Dow saw a 1,000 point decline, and this was in the first 3 hours of trading today from 6:30 to 8:30. It was literally downship. It looked like we were literally elevator down, and then we made a massive U-turn and just skyrocketed back up. Funny enough to actually finish the day positive. Unbelievable. The Dow was able to erase 1,000 points to the downside to actually finish $99.13 up, or 0.29%. The Nasdaq actually was down, I think, close to 5% here in the first 3 hours of the morning session. U-turned and finished up 71 points for the day, or 0.49%. And the SPY had a downward move of almost, I believe, around 150 points. And once again, U-turned and came back up and finished the day. SPX, excuse me, not SPY, finished the day at 12.19 or 0.28%. So what the heck is going on here? That is what I'm sure you're asking yourself. And you know, I was asking myself that in the middle of the trading day as well. And what I come to find out is really all of this craziness was really focused around worries over Russia's involvement in Ukraine. Okay, that was one thing. And the other thing also is Wall Street's positioning itself ahead of the Federal Reserve meeting, which begins tomorrow. And really, these two things are what caused today's sharp sell-off in the market and in the pre-market, the pre-market session, and in the morning session, the first 3 hours of the morning. Okay. In addition to that, guys, we have a whole lot of other stuff that we've been talking about here the last few days. Last week, if you, I put out a few different videos on my market analysis. Please go check them out. I think it's pretty good insights that still carry true into this week and into this market. But in addition, now the worries over Russia and its involvement in Ukraine, and then the Wall Street positioning ahead of the Federal Reserve minutes. Of course, those are two things that really caused today's wild and crazy ride, but we have other factors that have been weighing this market down as well. Inflation, stagflation, the Fed signaling of pulling back on some of the monetary easing. We have the Fed signaling that the interest rate hikes are going to start in 2020. And now to add also fuel to the fire, we have worries over two potential war scenarios, Ukraine with Russia and Taiwan with China. So a lot of this has been adding a lot of this, craziness that we've been seeing in the market, lots of volatility and lots of range expansion to the downside. So let's just take a look and see where we're at here. So today we came all the way down into this demand zone, and we literally intraday broke through the demand zone, but then once again in the afternoon session retraced and literally took price all the way back up and out of the demand zone to close slightly ahead on the S&P 0.31%, 0.31%. So what this tells me is that this demand zone is still valid. I personally don't like to make my demand zones invalid unless they close below the demand zone. This is a massive, massive, massive hammer candle, and you can see it right here. This is actually the 7th down candle in a row. This is a ton of buying, guys. There's so much buying pressure in here. Look at the volume. Tons of buying on volume. The bulls really, really took control of this session today. Now, does that mean all of a sudden, hey, game on and the party's on and we're going to fly back up to all-time highs? Absolutely not. It is something to take note of. We are looking at the S&P E-mini futures, and you can see that tomorrow's candle is already printing, and guess what? It's printing to the downside by about 43 points right now. Does that mean we're going to go down? We have to see what happens. But it is inside of this demand zone, and it is inside daily, inside weekly demand. Keep in mind also, we literally found this bounce correlating with the 4 ATR level right here. So that's very interesting how price got all the way to 4 ATRs and it bounced all the way back up. So these levels are holding up pretty well. The good thing is right now, technically, we are outside of correction territory. So that's a good thing. We got into correction territory today, intraday, and then we came right back out of it. So today's percentage off of all-time highs is actually 8 8.09%. You can see that over here. So we're 8.09% off all-time highs. So we're not in correction territory yet. I really, really like today's price action. Tomorrow we'll have to see what happens, but I mean, I think that, you know, seeing the buyers come in, seeing the buying pressure come in, I think a lot's going to go ahead and be determined after the Federal Reserve meeting, which is going to start tomorrow. So really tomorrow's going to be a wait and see. You know, the Fed could say one thing and we could rally. They could say another thing and we could fall. So it's really going to have to go ahead and depend upon what they're going to say. And then, of course, in addition to all the other factors that are weighing on the market. So it's going to be kind of a wait and see right now. But if you were day trading today I didn't get a chance to trade at all. I really feel pretty crappy about that because it was such a good day to day trade. Tons and tons of range intraday, lots and lots of action, but unfortunately work had me busy today, so I wasn't able to day trade. But for those of you who did, I'm sure you had an absolutely amazing day. Let's go ahead and take a real quick look at the Nasdaq here. So Nasdaq, we had the same thing, and once again the pin bar and the here I call it a pin bar, the hammer candle, whatever you like to call it, seventh candle down in the sequence here, and once again we found that buying support right here at 4 ATR levels. Now one of the things I am not doing yet is closing out this demand zone, because once again we did go ahead and go underneath it, and we actually went underneath this very, what I call a weaker demand zone, and retraced all the way back up. So we're technically still inside demand, although tomorrow's candle's already printing outside of it. So I'm not having a lot of faith anymore in this particular demand zone right here, but we'll see if this one holds. And we did snap once again right back at the 4 ATR level. Now, as far as the Nasdaq goes, we are still in correction territory at 12.51%. So, you know, Nasdaq still looking very, very bearish overall. But once again, we'll see what happens with the Federal Reserve meeting. We'll see if we get some information that allows the markets to go ahead and soar back up a little bit, at least to that 21 EMA, and then we have to go ahead and kind of see where we go from there. You will notice right down here that the VIX is just insanely skyrocketing. We actually have the 7-day VIX now that's printing almost $6 above, or 6 points above, I should say, 6 points above the 30-day VIX. This is just a massive amount of fear in this market and uncertainty, and the VIX is showing this with this screaming straight up, literally like a rocket ship going parabolic. So right now in tech, especially Nasdaq, I think it's still very, very good to the downside, providing what tomorrow brings us. But I think today was great to the downside in the morning session, and then of course if you were nimble enough, you could have caught some intraday bullish run back up there in some of the stronger names in tech. Hopefully you guys have been tracking the names that are not falling as fast as the overall markets, or maybe chopping sideways. Those are going to be your strong runners for when the market turns around. So keep that in mind, okay guys? One thing I do want to just take a quick look at here is what the weekly charts look like. I think this is very interesting, guys. Once again, I always like to go to the longer time frames because it gives me a little bit more of a sky high view of price action overall. And if you look at this, this is actually a pretty interesting chart right here. We are definitely in a strong bullish uptrend. And look at what we did here, guys. We actually dojied on the S&P 500. This is S&P 500. I don't know if I said Nasdaq, but I meant S&P 500. We actually dojied right here at the 50-day moving average, which is correlating right above the 10% off all-time highs, which would put us in correction territory. What does this mean? I love seeing a camera handle literally bouncing right here on the 50-day moving average on the weekly. This could be a really good area of support for the market. We'll have to see what happens. Nothing's guaranteed, but once again, I just think that is a really beautiful sight to see that hammer candle forming right here on the weekly 50 moving average. Okay. Let's take a look at Nasdaq real quick on the weekly, and let's see what that looks like here. So this is the Nasdaq futures on the weekly, and as you can see, we are underneath the 50 on the Nasdaq, but once again, that's a very nice hammer candle here. Actually, coinciding a little bit with this support level. Let me just go ahead and throw that in there just so I can show you guys what I'm seeing here. So like if you did that and you put that support level here, what was actually once resistance, become support, you could see that it kind of correlated with that right here as well. So once again, we have to see what happens. This is definitely an environment where it's a wait and see at this point in time for me. I want to see how everything works out with the Fed and see what the Fed says, see if they say anything that drives these markets one way or the other. Let's go ahead and just take a look at some of the other markets that I like to share with you guys. Here's gold. Gold really hasn't changed too much. We broke out of the symmetrical triangle. We smacked our head here above this supply zone. And literally, like I said, I thought we were going to go ahead and start chopping to the side. And that's exactly what we've been doing. We're kind of chopping to the side. We had a down day here, up day here, and now we're into another down day. So we're doing some chopping underneath this demand zone. I don't think gold is going to do a whole lot until I think the market kind of decides what it's going to do. It's either going to rally or it's going to fall, and I think gold is kind of waiting to see what happens here with the overall market. I'd say this week and maybe early into next week, and then we'll see where it decides to move. But either way, it's in this very interesting kind of a range situation with a lot of demand below it and a lot of supply above it. So we'll have to see where gold goes, but interesting to keep an eye on gold always. Oil. I talked to you guys about oil, and I felt like I was really, in my last video that I did, I was like, oh man, look at this candle right here. This one, this hammer candle, I said there was a lot of buying that came in here, and I really did think we were going to see a move up and out of this supply zone that would invalidate it. However, though, we got a rollover, which was awesome, down 2.15% on oil today, and then of course tomorrow's candle's already printing, and it's to the downside. We have momentum rolling over. Really good selling volume here on this candle here today on oil. So hopefully oil is going to come back down. I would love to see it come out of this demand zone and hit like maybe this 50-day moving average, come back down here, and that would be awesome for the prices at the pump. And to be honest with you, oil just really needs to calm the hell down because it's been on this rip, and of course when oil rips, gas prices go up. So hopefully oil will see a little bit more of a down move, although I'm not sold on anything because it looks like it might even just go into a choppy area, and we might just chop at this like 83 to 84. $82 to $85 range, somewhere in there. We might just see some chopping around for a little bit. So let's keep our eyes on oil, guys, and see where we go from there. Bonds didn't really do a whole lot of crazy stuff today. They started going up, and I talked about this in my last video. They gapped up into this doji, and then today we had what I call a bull gap trap, where I got gapped up, looked like it was going to go bullish, and then retraced all the way back down and actually closed outside of the previous day's price action back into this demand zone, which actually this demand zone's been invalidated anyway, so I'm going to actually be taking this off because this demand zone's no good anymore. So it just came back down. It engulfed the doji candle, and it is pretty bearish. We'll have to see where we go. There was definitely some selling here on this. So, you know, bonds, and this doesn't quite surprised me with the price action we saw in the market to see bonds retrace a little bit, but once again, I think it's really too early, you know, until we see what's going to happen with the Fed meeting to say exactly what's going to happen here longer term. Now, this is a beautiful sight, guys. We had a massive blow off candle here today in the VIX, which is what I've been looking for. I thought it would actually have come at the 25 level. If you guys saw my earlier videos, then I said it would probably come at the $27 level, and boy, I was wrong on both of those, and it blew even all the way through this 3250 level, 3275 level, excuse me, and also through this 3550 level, and it literally peaked out way up here at almost 40. But look at this retracement back, and of course this huge wick happened because we had that massive reversal in the afternoon. But you could see how high fear was with the Dow going down almost 1,000 points. This is where the fear really topped out at, and then retraced all the way back down here to close out just at about $30, or I should say 30 points on the VIX. Now what I'm hoping we see, if we're going to go ahead and get an up move in the market, is we start to see this rollover, kind of like we see it here. We get these blowout candles, retracement wicks, and then we just see a rollover, and then we can see this a few more times. Like here we get this blowout candle, wick, and then rollover, blowout candle, wick, rollover. So hopefully this is going to be a little bit of a self-fulfilling prophecy for the VIX, and since we have this nice blowout candle and a wick, we get that rollover. Once we get that rollover, overall market should start moving higher, and that would be good for everybody. But we'll have to wait and see what happens. The dollar, as you guys, I've said before, you know, we look at the dollar because generally a strong dollar equals a weak market. This one here, we actually had the dollar, you could tell it gapped up and it was kind of chopping a little bit. Then we gapped up again, you know, so all that downward movement in the market was really making the dollar rise. But we rose right up here into this trend line and we dojied out, and actually it's looking a little negative here on the doji, down 0.31% today. So if we do get a little bit of a rollover, and there was some selling here with the volume, so if we do get a rollover, that would be nice to get back down to this trend line here. That would help the market out, although we do have a lot of upward momentum, so there is a really good chance that, you know, if the markets do continue to go down, we could see the dollar break through this trend line and then try to reach this next horizontal resistance point up here. So we'll keep our eye on that, as obviously that dollar is correlated negatively against the market. And then just closing out the video with Bitcoin and crypto. Guys, I kept this level on here because I wanted to show you. I was just called this thing so perfectly. I said in my videos last week that in this old demand zone, and that's why it's highlighted pink, is because it's been completely violated, but I wanted to keep it on here for this video to show you. We had daily inside a weekly demand, and what we saw here was a lot of sideways action, absolutely no buying conviction. And I said in my video, I believe it was on Thursday, that there was no institutional buy orders here because there was no buying conviction whatsoever, and I thought price would slice through this demand zone and head down here and find support, and it's exactly what happened. It sliced through, came down into this demand zone here, and immediately you can see, if we just zoom in here, you can see these wicks. They tried to touch demand, got bought up, dojied, came down here, tried to touch demand, got bought up again. So there is definitely institutional buy order sitting right down here, which is really good for the overall crypto market, because that might go ahead and give us the juice we need to rise back up. So now that we have this demand zone has been invalidated, we're going to move both the weekly and the daily demand zone, old demand zone, and we can get a clearer picture of what price looks like. So what I'm looking for right now, and we're going to extend this out just a wee bit here, and this one is fine. Well, we can extend this out a little bit too. So what I'm looking to see happen right now is I'm looking to see if we can go ahead and get some upside movement on Bitcoin and crypto. We have to get through the 8 and the 21, and even still then we'll hit the upper end of this channel, and then from there we'll have to see where we go. If there's enough strength to break through it, we're on our way back up, and if not, we'll roll back over and we'll probably stay within this channel. We might get back down here to this demand zone, which of course would carry out further into the future, and if we smack our head here and come back, we'll probably get more buy orders to be triggered down here, institutional buy orders to move us back up. So it'll be interesting. Right now I'm not a buyer of Bitcoin. I'm not a buyer on the cryptos. I want to see exactly what happens here in the near future. But I am overall very bullish on crypto. I like crypto a whole lot, and I'm just waiting to go ahead and for the right time to be able to buy some Bitcoin and buy some crypto, get involved, because I do feel that we will see crypto rise back up. It's just going to take a little bit of time. Okay, guys, that is the video. I hope you enjoyed my market analysis. If you did, please leave me a thumbs up. It's the only way my videos are able to actually get out to people, is if you guys give it a thumbs up, and if you guys will go ahead and be so kind to subscribe to my channel. I have great content on the way, more information coming. I'm actually working on a brand new credit spread video, as I've been asked if I can create an easy to follow guide on how to trade credit spreads. I've been putting that together. I'm going to be releasing that on my channel here in the near future. And guys, if you would go ahead and click that bell icon once you subscribe to me, so that way you know when I'm releasing new content, you guys will definitely be in the know on when the new information's coming out to you. Okay, guys, thanks again for watching. Stay green in this market, stay vigilant, keep your eyes open. Remember, trade what you see, not what you think you're going to see. That's what my first mentor told me. It's made me a lot of money. It's made me a profitable trader. It's the best advice I can hand down to you guys. Just keep watching the markets. I'll keep bringing out these videos, and together we'll figure our way through this. Okay, take care, guys. Have a great night. God bless. Take care.